Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for April 29th, 2018. I just hope you guys had a great week last week, and I hope you had the opportunity to benefit from the dollar's squeeze higher that we've been looking for the last few weeks if you've been listening to these week ahead videos. But before I get into that, let me go ahead and mention that if you haven't tried ForexAnalytix, make sure you do so. It's only $1 for 10 days. You can try it out. Once you do it, make sure you go and download the mobile app from whether you're doing it from the Apple iTunes Store or Google Play. Make sure you download that mobile app so you can get all of our analysis right on your mobile device. I guess right in your palm of your hand, I guess is what I should say. But one of the things once you're logged in and you're going to see this is our analysis page. One of the things that I wanted to let you guys know is here in the next week or so, we're going to be releasing our new platform, which this is the new platform. I'm giving you guys a quick sneak peek of what it looks like. And it's all of the analysis really combined into one platform, and you can get everything from the calendars to your Twitter feed, which is all customizable, to all the analysis, to all the charts. You get to see everything just in one place, where this is the current platform. You have to click places and then to get to where the analysis is. One of the things I wanted to stress to you guys is that we at ForexAnalytix are constantly updating our technology. There are a lot of companies that offer analysis. There's several out there, but usually you're just directed to some static web page that is not interactive. You don't have a mobile device or mobile app, excuse me. You don't have all of the tools that we combine. So what you get for the price that you're paying, we hope that you see it as a very big value proposition, and we keep our prices competitively low, pretty much lower than anybody else in the industry. So and on top of that, you've got all this great technology that's being pushed out to you and constantly updated. So give it a try. Like I said, it's only $1 for 10 days. Now I'm going to keep you back at the regular current platform for right now, because this is what you guys are going to see when you're logged in. Let's talk about what had happened last week, and we're going to talk about obviously the week ahead as well. But one of the things that I wanted to point out is the euro dollar had pushed lower and the dollar had squeezed, and we've been talking about this very lopsided positioning. You've got a lot of traders and a lot of institutions that were very bullish the euro dollar into the beginning of the year as we pushed through the 121 level, and we were pushing towards 125. I mean, universally, I think everybody was looking for 130 and above. And what has happened is we've seen this reversal, and the euro has retreated to the 50% retracement. You can see it right here at the 50% retracement. We're nearing the 200-day moving average. Now, we did create a hammer candle on Friday, so the chances of a euro continued bounce back towards 121.50, maybe 122, I think is pretty high into the beginning of the week. But I think the damage has also been done, where we've seen a lot of dollar, we've seen a big dollar recovery, not just against the euro. I'm going to show you other currency pairs as well, where you're going to get people covering their dollar shorts if there is a pullback from here. And I assume, like I just mentioned, there is going to be some sort of pullback. But you got to look at all the other majors too. I mean, look at the pound. So the pound, we talked about this bearish. If you remember the weekly candle from last week, we had a bearish engulfing, or big shooting star, whatever this candle. It was actually a bearish engulfing candle. It played out perfectly with the weak GDP numbers out of the UK, and the pound had followed through. Now we've seen a pretty big decline in the cable just in this last week. not to mention the last 2 weeks. So can the pound bounce from, the 137 level, maybe back up to 139? Sure, absolutely. But I think that traders are going to be looking to sell rallies, not only in just the euro, probably the pound as well. Take a look at what's happened in the the commodity currencies like the Aussie and the Kiwi. The Aussie channel support 161% extension, and then we got a reversal candle on Friday. So I would think that the Aussie could recover towards 76 cents, maybe 76.50 before turning lower again. And if you look at the Kiwi, very similar situation. The Kiwi dollar, 106. Now you can't see it here. Actually, let me go pull it up over here. 161% extension of this last move. Okay, we might bounce back to 71.50 as well. The Canadian, oh my gosh, this was a really big squeeze. Now I'm just so you guys know, I'm leaving the Canadian alone personally until we get past the NAFTA negotiations, because I personally played the squeeze higher in the Canadian the last week, and we stopped at the 618 retracement, and frankly I just don't know what to do with the Canadian at this moment in time. But we stopped at 129, so as long as we're below 129, I would think that that it's going to be a bit of a struggle. Now, one of the points that the guys from my office made, and this is a really good point that you have to think about regarding the Canadian currency, is once we get past the NAFTA negotiations and there's a new NAFTA deal in place, which everybody's under the working assumption that is going to happen. A lot of people wonder if it's going to be buy the rumor, sell the news, meaning that maybe you sell the Canadian dollar because everybody's already expecting it. But the fact of the matter is, and this is a point that comes from the guys at Gelos Capital, and it's the firm that I trade for. One thing that's really important to understand is the Bank of Canada has really not been very hawkish because of the ongoing negotiations. So once NAFTA is negotiated and there is a new agreement, the Bank of Canada might be a little bit more hawkish. So you have to be careful about selling Canadian dollars or buying the dollar Canadian. So even if there is a new NAFTA negotiation, I'm not really too sure what to do with it. I'm going to have to let the charts guide me. And the one thing that I do want to point out is, as long as we're below the 618 retracement or 129, I'm having a difficult time being long the dollar Canadian at this point. It was a great ride from the mid 125s up, but where we're at right now, I don't know. It's iffy, and so it's a currency pair that I'm probably going to be staying away from until I've got a little bit more clarity from a technical standpoint. One of the currencies that I played personally, I played poorly, is I was short the U.S. dollar, Japanese yen. As we were approaching the underside of this trend line, I actually got taken out of a short as I took a short going into the 109 level, and I got squeezed out of it, and I did take a loss. And I, with the dollar Canadian, with the dollar yen, and with yields rising, the 10-year yield rising above 3% this last week, I know we backed off a little bit. The dollar yen is one of those situations I'm not really too sure what to do with either. As we saw risk aversion, the yen wasn't bought, and that is a little that's a little nerve-wracking if you're short the dollar yen. So if we see stocks pull back, and if you see the S&P pull back from like this triangle resistance, and you start to see the S&P pull back towards the 200-day moving average, the question I'll be asking and what I'll be looking for is to see if the yen performs well if the stock market sells off. And if it doesn't, then I'm going to be really nervous about selling any yen pair. So I think the yen and the dollar yen, euro yen, Aussie yen, Canadian yen, any other yen pair is really moving with yields. So if yields continue to rally and bonds continue to sell off, you might have to look at all these yen pairs, whether you're talking about the dollar yen or the euro yen or any other yen pair. They may continue to rally. So I'm a little sidelined with the yen trades at the moment, and I'm not really too sure how to approach them. Probably the clearest trade right now, in my view, is still the euro dollar. The euro dollar has broken down. Yes, we might bounce for the next day or two, but any rally towards the 122 level, I am looking as a possible short. And also, you know, I need to mention with the dollar index, let's take a look at it really quick. The dollar index has broken that downtrend line that we've been that's really captivated us since the beginning of this last year. We have hit the 200-day moving average. Okay, we hit the 200-day moving average. We hit the 24% retracement, the 50% retracement of this move lower that you can see here. Here's the, you know, from the top to the bottom here. We hit the 50% retracement, 24% retracement of the big move. I still think this will be broken to the upside, but you have to be aware that we are knocking our head up against that 200-day moving average. So if I had to draw it out for you guys, I would imagine that the dollar index may pull back a little bit, you know, maybe towards 91, and eventually a break higher. And that's the way, that's my plan of attack right now. And I may be wrong. We may just blast through the 200-day moving average and the dollar will be bought aggressively. Because if you think about what's happening next week, now there are several things that are happening next week that we need to be aware of. First of all is the FOMC meeting, which happens on Wednesday. Now, the market is not expecting the Fed to move on rates. However, you know, what's said by the Fed chairman Powell and the tone that is struck may move the dollar aggressively on Wednesday, not to mention that it is non-farm payroll week. All right, so we do have our jobs report on Friday. Those are things that we need to be paying attention to. Plus, there's ongoing trade negotiations and tariff negotiations between the U.S. and Europe this week that will be taking center stage on top of NAFTA agreements that are being negotiated. So there's a lot of moving parts that you have to be aware of. And I guess I should also mention that we do have a holiday in a lot of parts of Europe on Monday. It's Labor Day. So we might have a little benign volatility in the FX market on Monday, at least in European trade. But we do have employment data Tuesday, or actually Wednesday morning, but Tuesday night. For us, we have New Zealand employment. We also have we have a lot of PMIs coming out of the UK, manufacturing, construction PMIs, service PMIs all week. And keep in mind that the cable has been, you know, really underperforming here. So I would be a little nervous with the cable because we have this big double top and false breakout, which could lead. I mean, you know, we break through 137, and that could be, you know, lights out for the cable. And then, you know, on top of that, we have our jobs report out of the U.S., not Canada, but out of the U.S. on Friday. So it's going to be a very busy week, guys. The dollar has responded well, and we've seen the dollar, you know, rally back as we had expected the last couple weeks. Again, if you missed that, you know, go back and listen to our week ahead videos from the last couple weeks. We've been preparing you guys for a dollar bounce, and it has materialized, but it's going to be a little bit trickier from here. The easy money on the turn in the dollar had been made last week, so you have to be, you know, I think buying on dips, but we might get a dip in the dollar, maybe back towards 91 before a continuation higher is what I'm thinking, at least for right now. But we'll see as the market opens later on today. Guys and gals, if you like this video, make sure you like the video on YouTube. Click the little thumbs up button. Ring the little bell if you're new, and then also make sure you subscribe to our channel so you can witness and watch and review all the great interviews that take place throughout the course of the week. Remember, these are free webinars that we put on. You know, not only do we offer a platform for you guys to use, we offer a community for you guys to trade in, which is right here. If you can go to the chat room, where we have about 100 traders in there every day that are talking about the markets, that are just like you guys. We have a great community, and we bring you free webinars every single day that you can listen to and ask questions. So guys, take advantage of what we have here to offer. My name is Blake Morrow with ForexAnalytix. Thank you so much for listening in. I'll look forward to seeing you guys actually tomorrow morning on the Face webinar. And if you don't listen to those, I'll see you next week for the week ahead video. Thanks for listening in. You guys have a great remainder of your weekend.